It's UPBOptionMillionaires.com on a Sunday, December 13, 2015. Everyone's watching football. I'm looking at charts and look at this pullback we've seen really since the start of December. Pretty somber. Where are you, Santa? Santa, don't leave us now. The Santa Claus rally everybody's been expecting. So far, it hasn't come to fruition. Santa's sled, it's just not coming. If you look from a longer-term perspective, it looks pretty bearish. We've broken through the November lows. We're back to the October. Santa, save us now. And I'm going to talk about this for a little bit here because, everybody can talk about where the market's been. Obviously, we sold off. We're getting clobbered into December. But really what matters is, where is the market headed, folks? Where is it headed? If you look in August, we consolidated. Throughout 2015, it was pretty much a consolidation phase. But in August, started to pull back. It was China. Oh, China, you're going to ruin Santa Claus for everybody. And then we pulled back again to September. We hit the September lows before we rallied. Well, guess where that rally stalled? Right at the start of November. And where did this recent rally stall? Right at the start of December. Wow, a pattern forming here. So we've broken down through those November lows. Something to watch for, though, folks, is what I'm going to call in this, Christmas time season, the three wise men. There's 1, 2, and a 3. See that? A 1, a 2, a 3. This is support here. We're right near it at 1990 on S&P 500 futures. We break below it, curtains. We're going to retest those lows that we saw back in August and September. We hold it, and folks, we're going to rally. Well, guess what? Historically, the last couple of years, Santa has arrived. And guess when Santa Claus has arrived? In the middle of December. My goodness. And guess what we're approaching this time of year? The middle of December. Look, Santa Claus. Back last year. Where did his rally start? The middle of December. We hit our lows. We sold off at the start of December. We hit our lows and we rallied into the end of the year. Go figure. So if you want to look for this market to rally, look for the three wise men. They'll be looking for the North Yellen to guide them. Forget it. Well, let's look at some charts. We can look long-term trendline support. If we do break through the three wise men, which would be not so nice this time of year, support will be at the August-September lows here, August-September, which goes all the way back to the Ebola lows back in 2014. Everybody's so bearish on this market as we pull back. Just, understandably so, as we pull back really on Friday. A nasty sell-off, but the last 10 trading sessions, a robust sell-off. Absent the jobs report, if you took this jobs report out, we'd be at levels a lot lower. And obviously, if you took every rally out, we'd be probably a lot lower than we ever were. But you look at the rips here, and go back to March 2009, the dips used to be bought. Now the rips are getting sold, so we have these rips. Early in the session, really, the opening bell comes, we rip, sell off, rip, sell off, rip, sell off, and then Friday, just sold off. That's a little concerning. Also concerning, folks, the U.S. dollar index. We'd love to have a stronger dollar, but guess what's not going to be good for the stock market? If you look from a 20-year chart perspective here, the U.S. dollar index broke through this wonderful pennant pattern. We're coming back maybe to retest it before we rocket up to the upside. Folks, not going to see highs that we've seen for the U.S. dollar index in over 12 years, which is going to continue to weigh on the commodity complex. Talked about crude oil, same kind of 20-year weekly chart. Talked about this trend line. Talked about it. Go back to my videos. Draw a trend line across. I said crude oil was broken. Oh, did we ever break down? This past week, a killer move to the downside, crude oil, which a couple, even 6 to 9 months ago was bullish for airlines and the consumer. But guess what? When you're, losing jobs hand over fist, and I saw a little piece that thinks the energy market's just going to go belly up. Over 50% of the corporations are going to go bankrupt in the next 6 months. I know it's probably just a little bit blowing the fear into the minds of the market participants, but something to keep an eye on. Also, look at the S&P 500 ETF, the spiders here, bumping up against resistance. Support here, and you can see it came back to support back in August. That's where we're going to lie here, about 185 level if we do pull back. Something to keep an eye on. And so, from long-term chart perspective, you can bring it up. It's like, against the trend. We're not. The trend still remains to the upside. We haven't broken down. But eventually, if we do break below the support line, You will be fighting against the trend. You are young and strong. You are fighting against the trend. Still fighting. All right. Continue on to IWM small caps. Lagging. They've been lagging really since the latter half of 2015 when we had that break below 120. I talked about this just mere months ago. The 120 level, we came up, we kissed it a couple times. And we broke down. Support here is at the mid. Actually, if you look, we're right there. This chart is not accurate. We closed at 1191. So we're right there. We are right at support. This could be a good bounce point. So we'll see what happens here with the market as it opens on Monday. Also, NASDAQ QQQ 110. We've had round numbers 100, 110. The NASDAQ actually was performing quite well this week. Come down to 110. Is this support? If not, 100 is in the cards. FANG. How about FANG? Now, if you look from a chart perspective on FANG, look at this. Very bullish there. FANG. That's Netflix, Amazon, Google. And what's the last one? Hello? Amazon. All very bullish. But if you look, XLE. This is one that hasn't really been still going against the trend because the trend has been broken. The middle of 2014 coinciding with what? The U.S. dollar index. So as the U.S. dollar index has rallied, crude oil, energy, commodities, something I talked about. If you look, everybody loves to do their predictions for the start of the year and throughout the rest of the year. Say, hey, this is what's going to happen. Well, guess what? One of my predictions was the continued pullback for commodity prices, crude oil, energy, and a rally in the U.S. dollar index. And we've gotten all of that. And then some. Look at this move we've had. Support, if you draw a trend line across here for energy, lies at 60. Okay, we came pretty close on Friday. So that's something to watch. A bounce point. That might be a tradable low here heading into the end of the year. End of the year is going to be a little freaky, a little crazy, a little wild. We've rallied the second half of the last couple months. So that's something to be wary of. What is that going to mean? A stock like FCX, which I've been talking about. Look at this. I draw this many, many years ago. This head and shoulders topping pattern. I talked about it before the start of the year. I said FCX was going to be a penny stock. Pretty close, right? $1.90. We were up in the 30s when I talked about this. Start of the year. Look at this. Start of the year. We were almost at $30 a share. I said, penny stock. Pretty close. Yeah. FCX, if you look from a longer term perspective, off the lows March 2009. Well, guess what? Here, slashed its dividend. FCX said, hey, we're going to slash our dividend, cut costs. Guess what they did here? Slash dividend and cut costs. Could you imagine if we get a rally like this? Would you want to miss out on something like that? I don't think it's going to happen quite that way. It's not going to be that explosive. We might get a little bit of a bounce over 10, maybe 12.50, especially if copper comes back because copper's been mauled. But it's something to keep an eye on, something to trade a little bit. How about Twitter? A couple stocks last week on the Option Millionaires watch list. Twitter, let's get this volume a little bit out of the way. And look at his bottom here. We could be seeing for Twitter, $35. Anyone? By the end of the year? It's a possibility. Also with GoPro. GoPro, look at this nasty move. We hit over $90 a share at the, towards the end of 2014. Came into 2015 still up in the 80s and the 70s. Pull back here. We're at $19. We get a little bit of a snapback rally considering the short interest. This could be $30, $35 in a blink of a drone GoPro camera visible. I don't know. I'm just trying to be funny. And I'm not really that funny a person. Same with U.S. Steel. Steel prices, iron ore hit lows. China demand. They're not building as many ghost cities as they used to. I just saw a great footage on The Economist about a bridge they're building in China. So that's bullish, somewhat. But look at this. If you look from a long-term perspective, look at this breakdown here. From a technical perspective, something we haven't seen since 2009. Oh my goodness, folks. Get the banks back in here to upgrade the stock. Bank of America. JP Morgan Chase, where are you? Look at this move we've had lower for U.S. Steel. We're going to bounce back. My gosh, who would have thought $15 would be a great deal for U.S. Steel? For a 100% move to the upside. All right, UPB, your optionbillionaires.com. So Looking forward to this week. It's going to be a really interesting week for the stock market. Are we going to see, and if we pull up S&P 500 futures, crude oil one. Are we going to bounce crude oil? Hello? And again, we were young and strong. We were following the trend. Don't go against the trend. The trend is not broken yet, but we could be setting up for a historical topping pattern, just like we did here. Look at the bottom here for the S&P 500 futures. A nice little inverted head and shoulders pattern. Is that what we're seeing here? Some sort of a topping pattern. We break below support here. If we come down, this is going to be the trade of a lifetime. And that I talked about this for many, many moons, especially when we crashed back in August. I said, the great thing about this move here is the height at which it's going to occur from. You're going to have so much room to trade for the downside. Don't fight it here. We're going to get the central banks trying to augment asset prices to the upside. We're going to get interest rate cuts. We're going to get a delay, if that's even a word, a delay of the first Fed funds rate hike since the Industrial Revolution. Something to keep an eye on going forward. So if we do indeed get that to happen, that's going to avert this possible breakdown, but it's something to keep an eye on. Topping pattern. The same thing, though. I've been talking about this for many moons. Don't fight it until it happens. We break through support. There's going to be plenty of time to trade for an erase of all of this upside, if it does indeed ever come to fruition. UPBOptionMillionaires.com. Enjoy the rest of your weekend. Goodbye.